Hello traders, how have you been? I hope all safe and sound at your end. The topic of this video is how we can decide the best intraday time frame for any market, for any exchange. We can approach this video as an extension or part 2 of this particular video, which was the best intraday time frames to trade. And in this video, if you have watched this already, you would have known that for the Indian equity markets, 375 minutes, and now the progression parameter of 5 times. And we came down to 75 minutes and 15 minutes for the Indian equity markets. But Indian equity markets is it's not the only equity market or financial market in the world. In fact, I was checking on a list of stock exchanges on Wikipedia, and it's of course a very long list. So if you are based in Singapore and you trade the Singapore stock market, which starts at 9 o'clock in the morning and finishes at 5, though they have 1 hour lunch break also. So what should be your time frame? Or say, for example, if you trade the commodities market in MCX, which starts at 9 in the morning and goes all the way up to 11:30 without any break, then what should be the ideal time frame? So I thought that let's quickly extend the last video with a very unique approach, which I used. That how can we decide the best intraday time frame for any exchange? To do this, first and foremost, we need to understand the logic, or let's say, if you want to call it, the rationale. See, if you open any stock chart, so over here I have opened the chart of Reliance Industries. This I'm using tradingview.com, and this is the daily chart. This is the daily time frame. The main reason why I categorically keep on repeating that daily is one of the best, if not the best, time frames to trade for a positional trader is because each and every candlestick or bar represents one day, and the amount of information, the amount of time that goes inside one particular candlestick here is same across all of them. So for Indian markets, each and every candle for Reliance over here has had trading from 9:15 to 3:30 each and every of these candlesticks. There are very few rare exceptions, like a Muhurat trading day, like an upper circuit or a lower circuit day where 1 hour or 2 hour can be less. But I would say more than 99.5% of all the candlesticks that you're looking at here on Reliance, each and every candlestick will have the same amount of time associated with them. This is one of the biggest strength. If you go to weekly, yes, most of them will have Monday to Friday 5 days, but there are frequent holidays, at times 2 to 3 days of market holidays in a week. So in that case, compared to a daily, there are far more weekly bars, which is not as same as the others. And when I say not as same, I only mean the amount of trading that has happened, time, right? And we're talking about time only here in this video because we are talking about the ideal time frame to trade for an intraday. Now, the issue with intraday time frame is, say if you choose 30 minutes for the Indian markets, of course there will be one candlestick which will not fit into it. the last candlestick will be 15 minutes, because from 9:15, if it keeps on going till 10:15, 11:15, and like that, it will stop at 3:15, and the last bar will be 3:15 to 3:30. Likewise, it depends on software to software, platforms to platforms. If it is not completely divisible, then it becomes very difficult, because there will be 1 or 2 bars on your chart which will not represent the ideal time frame that you have chosen. And so any indicators like an RSI or a stochastics or a moving average, which is derived from price, will not give you the complete picture. It will give you incomplete picture. Now, in my previous video, where I explained the 375 minutes of trading in the Indian markets and how it is divisible by 5. So if you choose 75, you will get exactly 5 bars of 75 minutes each. And then if you divide further 75 by 5, you will come down to 15 minutes. So from 9:15 all the way down to 3:30, each and every candlestick will be 15 minutes. Now, this is fairly uniform. What I'm attempting to do is allocate the same amount of time per candlestick. This is important. Now, if you go to MCX or if you go to any other exchange where it's not divisible, and you always land up. So 60 minutes is a very, very common, 1 hour is a very, very common time frame that people trade. But then you will always be left behind by 1 or 2 bars, depending on the software, where you will not have the complete picture, and you will end up taking decisions. It can be a price action decision, it can be an indicator based decision, which is not going to be complete. But visually, see, visually when I'm looking at this chart, the last candle can very well be an incomplete, because it has only half an hour. But visually, you don't see it, and that's why you ignore it. It's happening at the underlying level, but you just cannot visualize it. So how do we deal with this? That's the objective of this video. So what I thought was, why not use the concept of square root? This is a simple Excel sheet where I'm going to explain the approach to you. What we have done here is I've taken NSE, starting time and ending time, 6 hours and 15 minutes of trades. If you boil it down to total of minutes, it comes to 375 minutes. And if you take the square root of 375, it comes to around 19.36. So let's say 19 minutes. Okay, 19 minutes, I'm sorry. 19 minutes. So if you plot 19-minute chart, okay, let me quickly check if TradingView will allow me to do that. Yes, TradingView is allowing me to do that because I have the pro version. So if I plot the 19-minute chart on the Indian equity markets, I will have 19 bars of 19-minute each, few minutes here and there. So I have exactly the same number of bars or candlesticks of the same time frame, 19 bars of 19 minutes. So now I am allocating the same amount of time to each and every one. Now this is not the ideal situation for Indian markets, because it's 375 minutes and we have a beautiful 15-minute fit and 75-minute. So for the Indian markets, I will not suggest 19, because you have such a beautiful exact fit of 15. There's no need to go to 19. You may do so if you want a slightly longer time frame than 15. You have the inclination towards moving towards 30. Then might as well use 19. But then if it's an MCX, and let's say if it starts at 9 o'clock in the morning and ends at 11:30, you're looking at a 14.5 hours of trading, which boils down to around 870 minutes of trading for the entire day. And if you take the square root, it comes to around 29.5 minutes. So you can say 30 minutes. Likewise, any market of any time frame, let's say whichever part of the world you're listening to me, whichever exchange you trade, and you want to find a good fit, a good time frame, wherein every candlestick will be allocated more or less, more than 99% of the time, the same amount of time, then you use the square root. So we were talking about Singapore Exchange some time back, and we are looking at 9 to 5. So let's say I copy this whole thing down here. Singapore Exchange, we're talking about 9 to 5 p.m., which is 3 plus 5, 8 hours of trade, but they have 1 hour of lunch break, so that will be 7 hours of trade. 7 hours of trade boils down to 420 minutes of trading in a day, and the suitable time frame is 20.5, so 20 minutes. So if you plot any stock on the Singapore Exchange, and any Singaporean company which is listed on their domestic exchange, and if you want to be an intraday trader, you want to take a good time frame, then you can use 20. Now, in these cases where it's a round figure, let's say 420, we have 375 for our markets. If you use 10, it will fit in well. If you use 15, it will fit in well. But it's on those precariously different kind of time frames where you need some more clarity, and you want to stick to only one time frame and not get bothered by the others, then I would suggest you use the concept of square root. Number one. Number two, the other point of using this square root concept is the fact that you will be looking at a time frame which others will not be. See, the general public will be looking at 5 minute, 15 minute, 30, 60, etc., etc. by default. I'm not saying that they are ineffective or not so sufficient time frames, or I'm not trying to say that the square root time frame will give you some kind of a secret advantage. As long as you can trade, you know how to trade properly, you're not psychologically bound to your position, you know how to enter and exit without much emotions attached to it, any time frame will work fine. But if you want to stand out from the crowd and do something different and do it differently, then the square root approach will give you a time frame which no other people will be looking at. This is something that I stumbled upon myself while I was doing the study of Fibonacci numbers and the square root of Fibonacci numbers, which acted as beautiful, strong levels of support and resistance. And that's when I started working on the square root concept over price and time, because these charts are essentially made up of price and time both. And I found out that the concept of square rooting price in many places yield very good levels for support and resistance. And that's why I experimented with square rooting the time also. I purposely do not use or teach this in any of my programs, because everyone may not have a full-blown paid software which will allow them the flexibility to plot a 19-minute for the Indian markets. So let's not teach anyone or show anyone something that they cannot be able to practice it later. And that's why I always stick to the 15-minute and the 75-minute or the hourly. But in this video, I thought that there's a need for me to share this concept with every one of you, so that you can use it at your end and get away with the run-of-the-mill. Every public is doing the same thing. We need to stand apart a little bit, stand aside, and approach the market a little differently, and not get swayed away by the mass. As I generally say in most of my classes, that following the mass or following the herd is always a good thing, but you don't know, at times the alphabet M goes silent, and you continue to follow completely different nature of a herd. So we need to stand apart a little bit and evaluate the market, analyze the market, and trade accordingly. So I thought I'll share this video with you, my thoughts on how you can square root the time and decide upon only one time frame which you can trade for any exchange whatsoever. I hope this video was useful and valuable for your trading decisions. Please feel free to share your feedback and suggestions like you